Thank you all for making time during this busy results season to attend our financial results presentation. Also, each year we receive evaluations and comments regarding our medium-term goals, corporate strategy, IR activities, and the like from domestic and international analysts and investors. We utilize these opinions as one of our resources in management decision-making, and as such, I would like to express our gratitude for your cooperation with this survey. Today I will be going over our medium-term business goals. From the fiscal year ended March 2014 through the fiscal year ending March 2018, we expect our operating income to total 61 billion yen and our operating margin to be 14.4%. Both of these represent tangible improvements compared to 5 and 10 years ago. However, we remain 9 billion yen short of the target set forth in our medium-term goals. I stated that achieving our medium-term goals would be a challenge at our financial results presentation in May of last year. Now I would like to go over the major reasons in each of our businesses for us missing our operating income goal by 9 billion yen. Because we have strengthened our Pachislo model lineup and sales structure over the past 5 years, we have greatly surpassed where we were in the contract development era of 10 years ago. We exceeded our targets in consumer due to contributions from 1. Focusing on internal development, and 2. Improving the ratio of digital downloads. While we did focus on internal development in order to acquire operational know-how in mobile, we've been unable to deliver results. However, we expect to grow here in the future, following the arrival of high-spec next-generation mobile devices on par with home video game systems. Our licensing business under PC Online in Asia also did not perform to expectations, amidst a shift from PC to mobile in the Chinese market. As a result, despite a favorable performance in consumer, this business missed its target by a few billion yen due to PC Online and mobile challenges. This business missed its targets largely due to an increase in costs fueled by consumption tax hikes and a decline in prices. On a single-year basis, as of the fiscal year ended March 2017, we have achieved 4 consecutive years of operating income growth. We have also been able to maintain an operating margin of approximately 15.5%. However, this is 4.3% under our goal. As with operating income, individual businesses faced certain challenges. However, one point I would like to add is we consistently invested into the future of our R&D and businesses in order to achieve sustainable growth. The central focus of the Japanese market in the near term will be mobile games. However, if we were to focus only on mobile, we would be left behind in the global market. As such, we have undertaken new endeavors, including constructing our R&D building number 2, hiring over 100 new graduates each year, and investing in new businesses. We are giving priority to a system that delivers increased profitability each fiscal year, even if it means our margin decreases slightly in the short term. Further, during this 4-year period, the market conditions surrounding our businesses has undergone a number of significant changes, including 2. Globalization and the shift to digital in the consumer market. 3. The expansion of the smartphone market. 4. The decline of the PC market in Japan and Asia. 5. Consumption tax increases. And 6. Changes in verification methods for Pachislo machines. Despite these market conditions, we have been able to, in part, establish stable growth and a proactive system for shareholder returns through share repurchases, increasing our annual dividend to 50 yen, and achieving 4 consecutive fiscal years of operating income growth. Given the above, we have rescinded the medium-term business goals that had been in place. I will now go over our medium-term business goals going forward. For our medium-term business goals going forward, we aim to increase operating income each fiscal year for 5 and 10 years going forward through building up a stable earnings base. In order to achieve this and establish ourselves as a sustainable growth company, we must continuously 1. Produce exciting world-class content, IP, and 2. maximize earnings by leveraging our rich library of IP across multiple platforms and media. We do not intend to force changes to our release schedule for the sake of our medium-term goals. Rather, we aim to take a natural approach of establishing a build-up model of stable growth. I will explain starting from the bottom layer of the graph. Arcade operations deteriorating profitability has bottomed out, and while there have been regulatory changes to Pachislo and amusement equipments, we will secure stable earnings once we've established a 4-model production line system. In consumer, due to the shift to digital distribution, our sales of catalog titles grew significantly, from 4 million units 4 years ago to 8.8 million units in the previous fiscal year. Going forward, we expect stable earnings here each fiscal year, aided by re-releases, remakes, and the increasing number of platforms. Bolstering our consumer title lineup will be a growth driver in the medium to long term, along with 1. Expanding overseas, 2. Extending title life cycles through digital sales, and 3. Download sales, all of which we will strengthen and grow. We are not moving away from mobile. On the contrary, moving ahead we will leverage our IP and explore all possible options for building our business's foundation, including internal development, alliances, and mergers and acquisitions. For our licensing business in Asia, we will start again from the ground up, approaching not only the PC market, but also the growing mobile market. We will proceed with these endeavors in order to stably grow profit each fiscal year, 5 and 10 years forward. This concludes my presentation. Good day to all of you. My name is Haruhiro Tsujimoto, President of Capcom. Today I'd like to discuss our business strategies and plans moving forward into the fiscal year ending March 31st, 2018. To begin, I'd like to go over a summary of the game market in preface to our growth strategy for this fiscal year. The market surpassed $100 billion for the first time in 2016, and further is expected to grow to $140 billion by 2021. Continuing a pace of expansion that far exceeds projections from 1 year ago. Now I will explain the 2 prongs of Capcom's growth strategy. The first of these is to expand our consumer business. To this end, we will regularly develop and launch titles from major brands in the global market, including Resident Evil, Monster Hunter, and Street Fighter. Further, we will continue to strengthen our digital downloads business, which is an area we have been concentrating on for a number of years. The second of these is to overhaul our online business. In mobile, we will promote the use of Capcom's IP and explore launching titles developed not only internally, but also through alliances. Further, we will continue the business collaborations we have in the Asian region. Next, I would like to discuss our earnings forecast for the 2017 fiscal year. Similar to past years, our aim this fiscal year is to achieve 5 consecutive years of operating income growth, with our digital contents business as a growth driver. Our forecast calls for increased profits in all items. Net sales of 93 billion yen, up 5.8 billion yen year over year. Operating income of 14.5 billion yen, up 800 million yen year over year. An operating margin of 15.6%. Ordinary income of 14 billion yen, up 1.4 billion yen year over year, and net income attributable to owners of the parent of 9.5 billion yen, up 600 million yen year over year. Our earnings per share forecast is 173.53 yen. Our dividend forecast calls for an interim dividend of 25 yen and a year-end dividend of 25 yen. Resulting in a 50 yen dividend for the full fiscal year. Now I will go over the strategies and plans for each of our business by segment. We will focus on sales of major titles in the global market for our digital contents business. In consumer, we will launch 2 major titles this fiscal year, while expanding upon re-releases for current generation systems and promoting multi-platform development across all hardware. We will also take strides in esports, promoting titles such as Street Fighter V primarily from our US-based subsidiary, while at the same time exploring the leading-edge markets of AR and VR. What's more, we will look to secure future earnings by focusing on brand penetration in developing regions such as Asia, bolstering sales through localization and online distribution. We will continue to strengthen digital downloads, both full game and additional content offerings. We have a significant advantage in this area, given that we possess more than 79 titles that have reached over 1 million copies in sales. This fiscal year, we will continue to provide digital downloads from our back catalog of assets and forecast 33.6% of consumer net sales to be digital. Here is our scheduled sales lineup of major titles this fiscal year. We have 2 new titles and 1 catalog title that we expect to be in the million-seller class. In addition to the previously announced Marvel vs. Capcom, Infinite, which we expect to sell 2 million units and is scheduled for a September 2017 North American and European release and a late 2017 release in Japan, we have 1 other new title scheduled to launch this fiscal year. We plan to disclose further details when the time is right. Further, we expect to sell 2 million units of Resident Evil 7 Biohazard, which was released in the previous fiscal year, as a catalog title this year. Next up is our unit sales plan. We plan to release 37 titles, which is 5 less than the previous year. However, we are forecasting 23 million total units sold, package and digital, which is a 3.6 million unit increase year over year. Looking at package unit sales by region, first we expect sales in Japan to decline by 750,000 units to 2.75 million units, following last year's performance of Monster Hunter Double Cross. In North America and Europe, we believe major titles targeting the global market, such as Marvel vs. Capcom, Infinite and catalog title Resident Evil 7 will make contributions, with sales in North America expected to increase by 400,000 units to 4.7 million units, and sales in Europe expected to increase by 450,000 units to 2.65 million units. We expect sales in Asia to remain on par with the previous year at 400,000 units. As a result, we forecast an increase of 100,000 units overall, bringing the total package unit sales to 10.5 million units for the fiscal year. We expect full game downloads to increase by 3.5 million units to 12.5 million units total. Now I will cover our strategy for mobile contents and PC Other. For mobile, we will bolster development of new titles featuring Capcom IP, while exploring broad alliance possibilities with the aim of producing hit titles. Furthermore, by bringing titles such as Monster Hunter Explorer and Toraware no Paruma to the Asian region, we will steadily strengthen our earnings base. We intend to focus on the operations of existing titles for PC Other. As such, we will stabilize profitability by implementing updates for major titles in both Japan and the Asian region, such as for Monster Hunter Frontier Z and Dragon's Dogma Online. Moving ahead, I will go over our forecast for our digital contents business. This fiscal year, we forecast 65 billion yen in net sales, up 6.3 billion yen year over year, and 13.7 billion yen in operating income, up 2.7 billion yen year over year. We expect the operating margin to be 21.1%, once more exceeding the 20% mark. Breaking down net sales by subsegment, we expect 36.5 billion yen for packaged games, up 2.8 billion yen year over year, 18.5 billion yen for digital download contents, up 300 million yen year over year, bringing the consumer total to 55 billion yen, up 5.8 billion yen year over year. In mobile contents, we expect 5 billion yen, up 1.2 billion yen year over year, and in PC Other, we are forecasting 5 billion yen, down 700 million yen year over year. Now I would like to discuss the arcade operations business. While the number of facilities continues a slow decline, the size of the market grew slightly. For our strategy this fiscal year, we plan to strengthen our business foundation by developing new categories and expect to increase revenue by focusing on profitable facilities. We are forecasting a 3% increase in net sales for existing arcades and will stabilize revenue with establishments that utilize Capcom IP, such as Caracap merchandise shops and the Capcom Cafe. We plan to open 5 new facilities and close 1, giving us a total of 40 facilities. Further, we plan to hold consumer title-related events, such as game demos, with the aim of generating synergies. As a result of this, we should be able to both attract our home video game customers to our amusement facilities and to promote our consumer titles. This fiscal year, we expect net sales of 10 billion yen, up 500 million yen year over year, operating income of 700 million yen, the same amount as last year, and an operating margin of 7.0%. Moving on, I will go over our amusement equipments business. The Pachislo machines market shrunk following regulatory changes for model certification in 2014. Here is our strategy for the amusement equipments business. We plan to regularly release cabinets that utilize popular franchises in Pachinko and Pachislo. However, we anticipate a decrease in profit year over year following a major hit machine in the previous fiscal year. We plan to release 4 models this year, totaling 50,000 units in sales. Ace Attorney is scheduled to launch in May, and Resident Evil Revelations in summer. In arcade game sales, we plan to continue selling cabinets that feature both Capcom IP in addition to other popular licensed properties. We plan to launch Monster Hunter Metal Hunting G this summer, a follow-up to the acclaimed Monster Hunter Metal Hunting. This fiscal year, we expect net sales of 15.5 billion yen, down 1.3 billion yen year over year, operating income of 3.8 billion yen, also down 1.3 billion yen year over year, and an operating margin of 24.5%. Finally, I would like to discuss our other business. We will continue to execute on our single content, multiple usage strategy in the other business. In character contents, we aim to increase awareness of our major brands by leveraging them in video media. This fiscal year, the feature-length CG film Resident Evil Vendetta is scheduled for release in May. Additionally, the animated TV show Monster Hunter Stories Ride On has been gaining traction, gradually building awareness for the brand since it began airing in October of last year. Also currently running is Monster Hunter The Real, an attraction featured in the limited-time Universal Cool Japan event at Universal Studios Japan. This fiscal year, we expect net sales of 2.5 billion yen, up 500 million yen year over year, operating income of 1.0 billion yen, up 100 million yen year over year, and an operating margin of 40.0%. This ends my presentation. All of us will continue to work together as one to achieve our business objectives this year. Thus, we ask for your continued support. Thank you.